Felix here, and welcome to this pre-market, well, actually, early in the morning market live stream, because I didn't realize there was a daylight saving madness going on. They should really abolish that one. But what I want to walk you through here are 7 insanely valuable facts and data points to help you understand the market better, so you can make better decisions, so you can weather this dip with a great big smile and see it as a wonderful opportunity, because it is a wonderful opportunity if you know what you're doing. So I'm going to share my screen with you here. There we go. This is what we're going to walk through here. What are Wall Street banks really warning about? What's Goldman Sachs, one of the leading investment banks in the world, telling its clients? What is it that Trump just said that makes the market crash much, much worse? Why 30% down is the new normal, and it may get worse. But understanding why, it will allow you to position yourself in a way that will improve your outcome. And then I'll give you Wall Street's, literally Goldman Sachs's 10 reasons to be worried, which is very important to understand. Always important to understand the bear case so you can know how to position and look for opportunities. And then I want to give you the one reason that I'm actually really, really bullish, plus some bonus data that I wasn't going to share with you, but I think we've got a pretty smart gang here who tunes in most days live. So I think you can handle the data, and that will give you insight that very, very, very few people have. So that's the intention here. Does that sound good? If that sounds good, just write good in the chat, and I know that you're alive and kicking and keen to improve everything that you're doing here. Even though we're a little late here this morning. Mike, my friend, you need the hedging document. If you do, just drop me an email and I'll ping that over to you very gladly. I send it out to everybody who was on the last masterclass that we did live, which, of course, good point, my friend. If you guys want to also learn what Mike, for example, has learned, and so many thousands of you, I think 15,000 of you or something have watched the masterclass so far and actually learn what stocks do we buy and when, and I'll give you my tool for that in a moment as well. But there's a link down below, felixprehn.org/get-free, and it literally teaches you everything that I've learned over the last 13 years in the market. How do we spot the breakouts? What are the 3 key rules that every most successful trader and investor out there ever in the history of the market uses and understands, yet 99% of us don't. So it's completely free of charge. It's 15 minutes, felixprehn.org/get-free, and you are super welcome to get access to that. Brent, my friend, welcome to the Goat Academy community. Brilliant. I'm very excited to have you on board, my friend, and ask as many questions as you got coming up there. That's what it's pretty important at the beginning. Don't get quiet on us. Make sure you ask questions. Take advantage of the insanely great mentors that we all have and share. So welcome there, Brent. Now, this is from Goldman Sachs here. You know, the bankers with a warm fuzzy heart, the ones who really care about you. They said this: the unwind, which is basically people selling, got materially worse Thursday through Friday, though pain was felt the most anecdotally on Goldman's desk. So there was a lot of pain. Basically, people are selling not because they want to, but because they're hitting their stops, they're fearful, they're getting knocked out of positions that they don't want to be in anymore. So that's kind of, Goldman's warning there. And then this here is from El Presidente. This is Trump. And he put out this very, very now famous sentence. He said, there could be a little disruption. Let me show you what a little disruption looks like. This is like the heat map right now, live. I mean, look at that sea of red. Tesla down 7%, Nvidia 3%, Apple down 4%, Google down 4%, Meta down 3%. This is a proper morning sell-off. I mean, the sort of thing we haven't seen in a very long time. Probably not for about a year or so. So this is probably why this happened. He said, you can't really watch the stock market. And therefore, we're getting into a territory where we are, much like about 14 months ago, we're worried about one thing. By we, I mean the market. We're worried about the big R, the big recession. Is Trump's cutting of government jobs and government expenditure going to drive us into a recession because the Fed is too slow to cut interest rates? That's the big question here, right? And we'll come back to that in just a moment here. Fox Gaming, my friend, appreciate you pinning, putting out that link there for everybody who wants to learn in moments like these. These are the moments where you really want to learn, right? This is what's happening to most stocks right now. This is with the Russell 3000, so it's like most kind of mid-cap stocks. And look how much down it is. It's down 30% from highs, pretty much across the board, right? Okay, healthcare is a bit worse, energy is a bit worse, and financials are slightly better, but still they're down like 20%. And after this morning, everything is down more than 20%. This is a pretty significant sell-off, and I think we need to acknowledge that if your positions are down 30%, you're doing all right, right? You're just doing average. Now, can we improve on that? Always. Risk management is where we make our money. So again, I put a ton of risk management lessons into that felixprehn.org/get-free, and I'm actually thinking about adding some extra lessons in there, like a bonus for how do you really protect yourself in these times? How do you insure your portfolio so you don't like bleed from a crash, but you actually make money from a crash? If you wanna get a summary of that, write crash in the chat here, and I will know how many of you want it, and then I will make it, and we can put that out maybe tomorrow. Brent says risk management saved me. That's exactly what saves us in moments like these, and it may get worse. And you probably want to hear that. And like after this, I promise you, there's some positive news, and there is some real hard indicators that give us some path out of this, and that we need to understand here. And I'm seeing a lot of crashes here. Okay, a lot of you guys are worried about the crash, though funnily enough, slightly more of you are still worried about missing out on the big breakout. Okay, there's a lot of crash stuff here going on. Brilliant. And honestly, that's precisely what I always say to my new students is you'll have the most success if you focus on risk management, so crash management, rather than like I want to make $1 billion by Friday. So everybody who's coming to us with that mindset of like I want to protect my money, yes, I want to grow it and I want to accelerate the growth, but I actually want to protect that. The bottom line here is that those people actually do best. So all of you guys who've written crash here in that's a very good mindset you got there, because you're focused on the right thing. You're focused on the downside protection, and that's something that we need to do all the time, even in good markets when most people forget about it. Now, what's happening here the next couple of weeks? Well, the second half or most of March, we zoom in here a little bit, is typically historically not brilliant, right? And it picks up again from April onwards here, and therefore we have to like be realistic. The market moves in zigs and zags, and March is usually not a particularly great month for all sorts of reasons. Historically, this is the last 20 years. But after March comes April and May, which are typically much, much better months. So we need to ride out this wave a little bit, but we need to make sure that we still have some money left at the end of that wave so we can go back out and we can invest and we can buy the dip and we can buy the good quality stocks. That's really, really where we make money, right? What if you want $1 billion really badly? That's also a good thing, my friend. I like ambition. I like motivation. It's just a question of priority. Like in the priority always, and that's why I put this out. The 3 rules to better trading, but also better investing, because it's actually the same thing. Spot the breakouts, learn the rules, which is why I put that link down below to the masterclass at felixprehn.org/get-free. Okay, so let's run through Goldman's list of pain, and then we'll move on to the positive side of life as well, because there is a silver lining here. Jeannie Tsang, that super kind of you. Appreciate you sharing that. That this is helping for you, and if this is helpful for anybody, like again, put it in the chat. Just put a 1 in the chat if this is helpful for you to understand the market better and it makes you feel more confident and comfortable with your decisions. Then that's amazing, because that's the whole point here. Now, Goldman Sachs, one of the leading investment banks in the world, if not the leading. Certainly, if you ask somebody who works at Goldman, they say there is only us and nobody else. Yeah, that's how cocky those guys are. And they're saying, okay, there's 10 reasons why the market's tanking. The first one is growth concerns. So the manufacturing data here, thanks for all the ones, guys. Big Motor is getting no value out of this, my friend. Well, what's the reason there for that? Weak confidence reading payroll. Second is just tariff fatigue, because it's with Trump, it's like, oh, there'll be tariffs. No tariffs. Oh, the tariffs are back. Tariffs are gone. Tariffs are back. It's like confusing. It's probably strategy to like control the media or something. I don't really know what the point there is. Or maybe the strategy is simply just to tank the market, because that's going to make it easier for the Fed to cut interest rates, which I think is what they really want there. Big motor has gone up to 666. Okay, now that's a little weird looking, but anyway. And then, yeah, there's a lot of stuff that's weird. The German and European yields are breaking out. They're spending $900 billion allegedly that they don't have on defense and infrastructure, and that's a surprising thing from the Germans. The technicals are pretty weak, right? We're looking at the 200-day moving average line, and let me show you that right now inside Trade Vision here. And I'm working on a better version of Trade Vision rather, which where we now have like news summaries, which I think are super cool. And it's basically saying, look, the S&P marked its worst week in 6 months last week. It dropped 3.4%, driven by tariff uncertainty and tech sector sell-off. And then Trump policy, inflation data on the 11th is going to influence it a lot. The Fed's comments suggest caution on rate policy. And people are bearish, and then it even gives you like key drivers, like the price range we're looking at, the key dates coming up and stuff. And we're going to put all that out into Trade Vision, hopefully in the next, I want to say days. I don't want to promise a time frame, but it's coming pretty soon. And we're going to give that to you guys for free as part of Trade Vision. Everybody's already signed up because I think it's tremendously helpful to have the right data points, and we'll do that for every single stock, so you see exactly what's going on with your stock without having to trawl through all the news, and we'll literally go through social media and everything, our little algorithm there, and that's going to be super useful. So if you want to get yourself a trial for that, as a free trial for that, we're also giving you at the moment the Black Friday sale offer. That's how good that sale is. Why? Because I know it's a tough time for a lot of people, right? Portfolios are hurting. It doesn't feel good. You don't want to spend money. I totally get that. So we want to give you good data, good information, good indicators for like super low cost prices basically here. So what does the S&P look like? Well, not brilliant, right? Really not brilliant. The 200-day moving average line, we're now below that. That's pretty bad. But, and here's a silver lining. If you are a long-term investor, so not the guy who wants to get rich by Friday, this was the last time in October 2023 when we were below the 200-day moving average line. That was at $414. So we're up like 50% since then, right? And there are a couple of opportunities here in 2023. 2022 was a terrible year for the market, but just zoom out, right? Like in hindsight, was that not a lovely opportunity to buy the freaking dip? Yeah, of course it was, right? So if you have a long-term horizon, buying the S&P, buying the NASDAQ below the 200-day moving average line is usually a pretty good place to buy it. Now, with individual stocks, you don't have the same luxury because they can, in theory, go to zero, right? The index won't go to zero, and therefore it's a much safer place to put your money in times like these if you have a long-term horizon, right? Here's the NASDAQ, also significantly below the 200-day moving average line there. And again, it's mostly tech sentiment. Nvidia could lift it up if inflation data comes down. Tariff fallout is obviously still the key thing here. Weak consumer confidence. We lost 326 million in outflows just on the last trading day here. 6% down year to date so far. So yeah, it's it's a little concerning, and volume is pretty significant on the sell-off here, right? But again, zoom out. Last time we were below that for just one day was in August. That was a pretty good time to buy at 420. And the last time before that was in 2023, when the market really tanked quite a lot. But again, in hindsight, that was a good time to buy stocks, right? So just bear that in mind as we run through the rest of the Grim Reapers list from Wall Street. So saying, technicals are weak. We just looked at the other 200-day moving average line. The CTAs, the algo funds, they've sold a lot, but that isn't the full story. And I want to give you the full story in just a couple of minutes because I have actually a chart on that kind of blows this negativity out of the water. So this point here, the systematic supply thing, I would kind of take that away. But yes, last week, the computer funds sold a lot, right? And that's really important. There's not a lot of liquidity. There isn't. There's just not a lot of like people trading and buying stuff, and that means if no one's buying stuff, it's easier to tank the market. It's just like, you sell something, there are fewer buyers, so therefore you tank the market. The consumer, not some concerning data. We've come out of some of the earnings there. And then here, as I said to you before, I showed you that chart on seasonality. We typically don't do very well in these early March weeks, right? So The first 2 weeks of March are typically pretty terrible. That might turn around mid-March towards end March, at least historically. Okay, cool, guys. So that's the key thing there, right? Now, there is one reason that I'm actually really, really bullish. If you have a little bit of a longer time horizon, I'm not saying by Friday. And that is what actually drives the market. What do you guys think actually drives the market? Is it earnings? Is it great innovation? Is it what do you think it is? Put it in the chat. Put it in the chat, and I'd love to see what you guys think really, really drives the stock market prices in the longer term. Anybody? Any thoughts on what do you think drives the market on? And while you think about that, get yourself a TradeVision subscription, because we're going to give you the news, we're going to give you the alerts, we're going to give you the breakouts, because that's really super, super important. You know, and even in weeks like last week, there's still some breakouts, and we put them in here. We tell you what stocks are bullish, and more importantly, in a moment like this, we also tell you what stocks are bearish. So you can go like, well, do I own any of these? Maybe I should look at that position. Maybe I shouldn't be in that, right? There is also a screener in here, which is super, super useful. Super happy to show you that in a little while. But okay, love all of that. Greed, money, money is pretty good. Buybacks, that's actually pretty, really good there, Dave. That's a good piece of information. But Ant has got it right. Money printer go, that's precisely what it is. It is exactly that. So on the chart here, I've got 2 lines, right? Let me get a purple pen. Yeah. Bill Gates purple pen here. This is Microsoft. That line is money. How much money is out there? Money supply. So it's a little thing called M2. And this data is straight from the Fed. And in 2020, COVID happened. Right? This year was COVID. And they put the money printer on like they've never done before. Like we've never printed this kind of money before, not in like world wars or anything like that. This was just like the biggest money giveaway ever. And then they got a little bit concerned that they might have printed just a little bit too much, which they definitely did. And so they started shredding. Right? So they started shredding money up here. Okay, can we spell shredding? Shredding from here. And then in late sort of mid-late 2024, they stopped shredding. Or they not quite stopped shredding, but they're essentially starting to put money back into the system. Why? Because the banking sector was trying to collapse. So that purple line here is actually now money. So we're seeing money ticking up. And what happens when we print more money? Well, the money flows into the market, right? Like look at that line down here. Can you see that? You see how beautifully that aligns? That's the stock market, right? That's the NASDAQ. And then that purple line, this one here, is the money supply. Right? It's like, so you're not a genius. It's not the reason that we make money in the stock market. In the long term, if you just buy the index, it literally is just a function of money. And then they print more and more money, so the stock market goes absolutely nuts, right? And then what happens the moment where they start shredding money, money goes down, well, the stock market collapses, right? See that? And then they were like, oh, we broke something. So they started to print again. And the market very, very promptly saw the cue and is starting to go up. So the Feds told us they're considering shredding money, stopping the money shredding completely, which by itself means more money being printed. And that's really the reason why I'm in the medium term, in the long term, I'm always a bull and I'm always in the market, because the market's going to go up in the long term, simply because more money being put out. Does that make some sense to you? That makes some sense to you? Just put the number 1 in the chat, and I understand then that it's landing, that I explained it in a way that makes some sense for you. Put 1 in there. Marcus is asking, is money supply the same as quantitative easing? Yes, basically. It's just money printing. That's basically what it is. And Anna's and Brent, and you guys are seeing the ones there. Okay, brilliant. I also see the little party emojis coming up there from you guys. Brilliant. Okay, lots of ones, which is brilliant. So it's making some sense to you. Now, if you really want this to make sense for you so you can actually take advantage of it, then today is probably the best day where you go and watch my masterclass, to which I put the link down below, felixschwenzer.org/getfree. It's also pinned to the chat and it's in the comments too, so you guys can access it very, 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 very easily. And it's really all about learning the three rules that the most successful investors and also traders use, because we all have to use the same system, the same protocol that has been invented like 50, 60 years ago. And you can try and reinvent the rules, but it won't work. There is one set of rules and they just work. So if you want to learn them, well, you'd be better off than 99% of people who don't really understand them. Then I want to give you some bonus information here that looks a little complicated at the outset, but I think you guys can handle it. I think we've got smart, reasonable, clever people here who want to learn and want to understand something a little bit deeper. These are the forward PE ratios of the S&P. So it's today's stock price essentially divided by next year's profits. And when they go really, really high, people are concerned, right? Like at the top of the COVID bubble here, we were at like 38. That was pretty crazy, right? And then we've come down quite a lot. And we were at about 30, 32 here recently, sort of 31 roughly. We're now back to 26. And that's pretty good because if I draw a straight line across here, we're now at the same multiple that we were at in, say, 2017. We were at the same multiples that we were at in, 19, 22. And if you think about how much more efficient these same companies are now, they make more money per employee. AI is allowing them to make more money. Their margins are higher. There's a lot of reasons why actually multiples should be a little bit higher over time, because these companies get better. They're not doing the same thing. They're doing it better. So that's kind of good, right? And that's the Mag 7 basically up here. So this red line there is the Magnificent 7, the top stocks, which are definitely the most expensive. And then if you look at everybody else, so the S&P overall, well, overall we're not super cheap, but we're also not at super high. So we're at 22 as a multiplier there. I think given the general broad improvement we've seen in margins, I think that's somewhat reasonable. So we're not at like super top of the market. We've come down a fair bit, but especially on the Mag 7, we've come down a lot. And that's actually what's falling, right? If you look at the heat map right now, which is inflicting pain on our portfolios, look, it's the biggest stocks that are selling off the most, right? It's those guys. It's not the little ones. It's not Johnson & Johnson. It's not the little stocks here that are actually doing all right. Like consumer stocks are doing all right. Utilities are doing all right today. It's the big tech stocks that are bleeding the most here this morning. Here's another piece of good news that literally 99% of people out there don't understand. Crazy Horse, appreciate you saying that. Trade Vision is great. Which is why I put the link down below so you guys can get access to that, get access to the indicators, get access to what's bearish today, what's bullish, what's breaking out, track your profits, track your losses. The most important thing is to do what? Track trades or investments that haven't done well. And then you can actually see why they haven't done well. We allow you to do all of that. And as I said, we are running literally the Black Friday offer for you guys to make it really, really, really affordable. There's also a free trial, so there's zero risk. And we're doing that because I appreciate a lot of people are feeling some pain right now, and I want to make sure you guys have better information and better data than you presently have for really, really zero risk here. So check that out. Links down below, felixprehn.com/trade vision. Okay, so what have algo funds just done? Well, they've sold a lot, like a lot, and that, like really a lot. So algo funds are a positioning in the sense of, if they own a lot of stocks, basically, they're up here, right? And if they've sold a lot, they're down here. And right now, we're pretty low levels. We're like pretty, really low levels. So we've come down a huge amount. And what does that mean? It means they're basically done selling. So yes, last week was terrible because they were done selling, but they haven't really got much more money in the market, so they can't really sell much more. So that's stabilizing, right? Doesn't look like great news on the face of it, but it's actually stabilizing. So if you really understand that, then that's pretty useful, right? And look at these extremes. I mean, real extremes. So we are now down here extremely oversold. I mean, really, really, really oversold. So we're literally down here, somewhere we haven't been at for quite a long time. Even last August, we were not that low, and we bounced pretty nicely off the last August lows. So we've just come down in like a week to like pretty extreme levels, which historically have often indicated the beginning of a rebound. Now today clearly isn't that day, which is why you got to be a little bit cautious with it. But for me personally, I'm going to buy some NASDAQ ETFs today. Yeah, definitely. And I'll probably again tomorrow and a little bit the day after. So stagger it a little bit because you don't quite know where the bottom of the market is, but it's what, like 10% cheaper than it was at the top of the market. So I'm happy to buy everything at a 10% discount. That's the way I look at it. Doesn't mean you got to do that, by the way, right? That's just obviously up to you. You have to have your own plan and your own rules and your own risk management. And if you want to understand my rules, links down below to the masterclass, and you'll understand that. And I didn't invent those rules, by the way. I learned those rules from my mentors who've worked on Wall Street for 20, 30, 40, some 50 years. And they learned that from their mentors. And they're just the rules that everybody on Wall Street actually agrees on, that actually work and that make us into better investors. It's very simple, and it's about when do we buy, and it's about when do we sell, how do we manage our risk, and how do we automate the whole thing. And that's really, really such a key concept. So if you want to get that knowledge for zero, for free, because it's my gift to you, because I believe in giving out financial education, which is why we give away like 99% of everything that we do here. The 1% that we actually charge for is mentoring. So if you want to have people who look over your shoulder one-on-one, who are actually investment bankers, who are guys who've managed hedge funds, who are guys who've managed big pension funds, and look at your portfolio with you live on a Zoom call like every week for as long as you like, then that's where we obviously got to charge something, but we can give away like a lot of the rules and everything else for free. And I'm a huge believer in that, because I think it just makes the world a better place, quite frankly. And we need that, don't we? I think who needs some rules? Who needs some guidance? I mean, just be honest. Just write rules in the chat, and then I know that you're actually going to go and watch the masterclass, or you've already watched the masterclass. Links down below, felixprehn.org/get free, and it'll help you get free. Like get free from your burdens and your concerns. Now, this is a clever chart. I say that with some, well, I don't normally say that Bloomberg puts out something clever. They probably read it somewhere else. But what happens, what crashes markets? So we got this indicator here called the VIX, right? And I can pull that up as well for you in Trade Vision. Let me go on here in our advanced chart, and I type in VIX. Rules. So Mike and Jinx and Yor and Brent, Dylan wants rules, Paul wants world peace and rules. Love you for that, Paul. David wants rules. Cool. So what's the difference between what we're seeing right now and what we've seen at these previous pretty extreme spikes? Well, remember the August spike? How many days did it take to go up there? It was basically 2 days. So in 2 days, we went from normal to crazy, right? And then in late December, this one here, how many days did it take to get to the top? 1 day, right? So literally just something happened that was scary, and the market crashed and fear went through the roof. This one here is different because we're moving up slowly and gradually. Fear is ratcheting up a little bit. Typically, that means we don't get a crash because the market's sort of like, this isn't a terrible event, it's just feeling a little bit jittery, a little bit more jittery every day. And we're kind of going into this slightly elevated period, and it just usually means that it's not the extreme event that we might otherwise see. Although I must say, today is pretty strong, but VIX has only picked up, 2% today. So only 2% up in VIX and fear, which isn't what you normally see when you have sort of a crash event like here in December. We went from 16 to 25. So we went up, 28 even. So we went up 12. We went up like 80% in a day, something like that, right? Crazy. We're not seeing that here today. And that makes me feel a little bit calmer, So we're not at panic levels, and we put that in here in in the news summary, which you're not getting yet in Trade Vision, but it's coming soon. I'm just testing it. This is why I like to use the test systems here. But yeah, we put that in here. We also give you like the short-term ranges, the key drivers, and historic trends, and so on. And we can do that for every single stock that's coming up pretty shortly, which I'm super excited about. What goes up must come down. Yeah, certainly for the VIX. Like, it just has to come down at some point. It never stays elevated for a long period of time. That's just the way that this index works, and that's also why it's a good way to make money if you know what you're doing. So this is, again, something that we actually teach. This is an advanced trade. This is a really advanced trade. So I wouldn't touch this if you are not really super familiar with options, because there's definitely some risk to it that it blows up to 100 and then you get knocked out, which is obviously the most important thing that we want to avoid. So on that note, learn how to avoid that. Literally, that's the most important thing. If you go watch the masterclass down below, that'll help you a great deal already. Let's have a quick look at headlines, and then we look at some of our favorite stocks here, the Nvidias and the Palantirs and the SoFis and everything, and see how those things are doing. Bloomberg stocks drop as economic fears spur flight to bonds. Trump's protectionist policies and cuts to federal workforce dented confidence in U.S. economic outperformance. That's precisely it. Okay, that's about it. The German spending plans might have to get watered down or greened up at least. Green tanks. Buy some tanks that run on, I don't know, vegetable oil or something. That's probably what they're going to do. But yeah, this is the market right now, right? Which is pretty insane, right? Pretty insane moves here. So let's have a look at some of our favorite stocks. Let's kick off with, say, NVDA and Apple as well. And we've recovered a little bit. We were at 107. We're now at 108, but that's still pretty significantly miserable. We're below that brown line there. What is that brown line? That's the 200-day moving average line, right? That one there. And below that is an unusual place to be, because it means you are lower than you have been on average for the last 200 days. So it's definitely a real sign of a proper sell-off. The last time we were there was in 2022. 2022 was the last time we were there. Now, was it a good time to buy NVIDIA at $17? I'll leave that up to you. I think NVIDIA might be becoming a value play here. Earnings are on... Oh no, we just had earnings, 26th of February, so we're not getting any there anytime soon. So yeah, pretty significant though. So how low could we go? Well, there'll be a little bit of support here from these lows at sort of an 87. I think 100 is probably the one to test first. $100 here, I think, is really the one that we want to watch out for. You want to bounce above that, which was also the September low there. The brown line, yes, precisely. it's appropriately colored. Let's have a look then at some of the fintech stocks here, like SoFi. Is that a green number on SoFi? Can't be, right? No. It's at 1170 here. Why is that showing? It's up 0.3%. I'm on a test version. I'm on a trial, on a beta version here of Trade Vision, which is maybe why that's looking a little bit funky. Maybe I should look at the official live version here. Maybe my data is a little late on this one. Yeah, we're down. Okay, that makes sense. Yeah, we're down at 1173, which is what I was expecting. So the sell-off is continuing. It's worsening. We're now below the 150. And that's typically a pretty hard sell-off point for me, because that's where the risk really accelerates. So it's definitely something to consider. I did place some stops on my options actually this morning. So yeah, definitely that. I think it's just all momentum. I think that's really all it is. But I like trading the momentum. It's what made us 68% versus buy and hold, which has set people down 22% in the last 2 years or so. What else have we got? We've got Tesla, which is bleeding. Down 8.6%. Wow. That's pretty painful stuff here. At $238. So how low are we going to go? We're below all the moving averages. We're revisiting 2024 lows, really. I mean, we're heading for like the August low at this point, which was below $200. So yeah, momentum there absolutely falling out of the sky for no particular reason, I must add. I mean, in terms of what's got to do with Tesla, I'll show you what the actual news is on Tesla. Stocks declined 45% from its December 2024 peak, plus 8% today. Weakening sales in Europe and China. Yeah, a little bit true. Protests, I think that's probably got a lot of that's got to do with it. Analysts have lowered their expectations. True. Morgan Stanley raised its price target to 430, sees AI and robotics as an opportunity, which I actually agree with. Musk tweeted 1,000% gain in 5 years, but it's falling on deaf ears. So we are looking pretty unpleasant here. Now, of course, the funny thing is that all the tariffs, well, Tesla is the most American-made car there is in the US, so you'd think the tariffs would actually not be a bad thing. But at the moment, it's just momentum selling off absolutely everything, right? Palantir down 7%, but actually not looking anywhere near as bad, right? Because we're pretty much in the same zone that we've been in for the best part of 10 days or so. 2, 4, 6, 7, 8. Yeah, that's about 2 weeks. These are just trading days, right? Not weekends. But yeah, pretty significant sell-off there on some pretty decent volume for so early in the morning. So bleeding, like everything else as well. Akeem says the CEO being a Nazi has something to do with it. Don't be a bloody idiot. Elon Musk isn't a Nazi, a nitwit. If you believe that, please stop reading. Read less mainstream media, my friend, and more X, because that picture exists of every politician under the sun. So it's a really silly thing to believe in. Most American car, yeah, the car with the most components made in the US by value, by far. Microsoft, someone's shouting out there. Minju, good morning to you. Down 2.2%, not quite as bad, but it's a big tech stock. But still lower lows than yesterday. We're back to where we were on the 4th of March. Let's also have a look at Apple here. All the support lines have been blown out. Yeah, we have some data. We have some data missing there this morning for some reason from the support lines. The guys are on that. For some reason, there's something got broken. The support lines jumped out of the window. They gave up. They're like, there's no more support. Don't worry, we'll fix it shortly. Apple is below the 150-day moving average line yet again for the 3rd time in about 2 weeks, and trading at just slightly under the $230 mark, which is not brilliant. Though we have lower lows in Feb, we had much lower lows in January, so this is not that terrible, but again, not brilliant. Hood's falling. Wow, 13% down. Yeah, wow. Now, Hood tends to move quite a lot with crypto and also just with the market, because people tend to trade less when the market's falling. It seems like it's less fun. Still above the 150, so it's actually much better off than a lot of the stocks we're looking at here. But yeah, that's a pretty nasty candle there, minus 13% down. What are your moving averages? The ones I always use is 50, 150, and then the 200 there in that shit color. I only toggle on bad days. And this is one of those days. But the 50 and the 150 is what I really look at the most. So if you want to learn that system and those rules, because this is what the most successful investors out there use, go watch the masterclass. Links down below at felixprehn.org/get-free. And ACHR, says Ryan. Cool, we'll have a look at that as well. And guys, you can, of course, look at the same information that we've got here, Trade Vision and so on, if you just get yourself a Trade Vision account. There's a free trial, 0 risk, literally. And we're literally trying something very cool here. What we're just looking at, ACHR, we're going to have the coolest news ever. ACHR is still flying. Ooh, that's nice to see, isn't it? Is that? Oh, no, sorry. That's the data there is a little bit slow because it's the internal version. That is also down 8%. Yeah, it's still above the post-earnings dip, but not looking, of course, beautiful. But yeah, what I wanted to show you is we We haven't done the news for that one yet. Okay, so I can't show you. Okay, I'll show it to you on a bigger stock. So we're back to the breakout, 689 breakout. And what's the lesson here? What does that show you? Well, it shows you that, okay, you can have the most beautiful entry point in the world, like here, because we told you, and then you can rally up, like literally we doubled, right? So the stock 2x'd. But of course, the problem is that people don't know where to take profits, so they don't, and they come back to here, and now they're at 0% profits, and they're like, I think I'll hold on to this one, and then it's potentially going to go much lower, and then they become sad people, and we want to avoid that. How do we avoid that? Well, a simple thing like drawing a trend line up here would have saved you a lot of money, like a lot of money, right? And then you would have exited somewhere up here at 10, so you would have made, you know, at least 50%, which is pretty good, right? In a couple of weeks. So really it's about exiting and knowing where to exit. And maybe you're thinking, oh, you should have told me that weeks ago. Well, it's okay. You know, every bit of pain is there to motivate you and to push you forward and to get you to a place where you actually want to learn, because that's the most important. People always think, oh, I need the strategy, I need the rules. And that's true, but you need the mindset first, the desire to actually want to learn, the desire to make your money work for you, and the realization that that's actually possible. The realization is that there are lots of people out there who just live off their money. They don't do anything. They don't work anymore. They have some money set aside, and that money works because they know how to put it to work, because they understand the patterns and the rules that Wall Street's figured out decades ago. And once you understand that, if you're on the right mindset, now you can sit down and actually learn the rules, because you're going to accept it, right? And what we sometimes see, you know, most of you guys have a great mindset, which is why I love doing this with you, because it's so rewarding. But you sometimes see people and they go, oh, I watched the masterclass and, you know, knew all that already. I'm like, all right, then show me your portfolio sort of thing. And, you know, I don't, because I know that isn't the right answer for that person. But and you then look at thousands of people who go, wow, that was amazing. Like, I learned so much from that because they were in the right mindset. So it's the same person, same information. One is having that aha moment where they realize money can work for you. Money can be a business for you. And then you have literally, could be the same person just on a bad day, and it's just like, no, nothing works. So who's going to get something out of it? It's the person who goes in there with the attitude of like, I'm gonna absorb this information, I'm gonna implement this, and that's what makes all the difference in the world. Don't trading stocks do this automatically for you? And Michael said, Michael Masterclass helped me identify trend breakdowns. Brilliant. He sold something at 475, their stock's now at 350. And that makes me very happy, my friend. That makes me very happy. Then trading stops do it automatically for you. Yeah, I think trading stops can be useful. I think they're a little bit of a blunt tool because it's a random percentage. I think we could probably improve on that a little bit, but it's a good place to start, absolutely. I mean, any kind of stop is a good place to start. The mindset is follow the process and ignore emotions. Yeah, but that's easier said. I mean, easier said than done, right? I think it's really something that you need to learn over a period of time. And I think for me, the only way that was ever possible is by having people to hold me accountable. Doug says IV is super high for everything. Yeah, volatility is super high. Now that can also be an opportunity, right? You can sell options, for example. That could be a great opportunity. And Ron, yeah, I'm with you on that as well. Brilliant. So shall we have a look at a couple of other stocks? Anything else you guys want to shout out? I'm super happy to look at that if it gives you, a little bit of calmness here in this market, which is still looking pretty red, right? Pretty red. Tesla down 8.7% still. Wow. Tesla. Whoops, if I could spell Tesla. 8.6%. That's $239 down. Pretty bad. Brent said that's why I joined. I needed mentorship. And I think it's a brilliant realization, my friend. And it means you're going to learn. You're going to get really, really good at this. So have fun with it, but make sure you ask the gazillion questions. That's the only way to learn, especially if you think they're simple questions. A lot of people like hold them back because they feel like it'd be silly to ask. Nothing is silly. So just bear that in mind. We are super happy to walk you through everything 1,000 times till it makes a lot of sense. Right, what have we got here? We've got a few of you guys shouting out ELF. Interesting. Is that a stock that's actually up? Okay, wow, it's actually up. I mean, it's in a pretty bad place, but yeah, it's actually up 8.5% here. But it's still like $20 away from its 50-day moving average line, so I would be very, very cautious there. Very, very cautious. It's a falling knife. It reminds me a little bit of this chart here. AMD, where I keep telling people stay away from AMD, folks, because it's dangerous. But of course, you got to come to your own conclusion. Thomas says, I've watched the masterclass twice. Brilliant. And Mark, you just joined Trade Vision. Fantastic, my friend. You're going to get access to our news service shortly as well. I have a call actually with my my partner. We build Trade Vision together. Well, he and the development team builds it, and I come up with ideas, and I'm the impatient one. That's my contribution. And in all honesty, you guys actually come up with most of the features we build now because we want to build what you guys want. Right, what else have we got there? We looked at SoFi, my friend. It's not pretty. It's down 6% at 1178 right now, below the 150-day moving average line, which is not pretty. You seriously telling me that Plug is green? I thought they're going out of business. They're 1% up. But I suspect this is still a falling knife, isn't it? There's a chart. Yeah, it's still not good. Definitely not good. Albert, my cat is chewing a stick next to me. MACD, interesting. Interesting. It's up a little bit. A lot of the consumer stocks are up. We called that a breakout actually a day ago, and it's looking pretty nice here today, right? It's going up further. So there's always stuff, there's always something that goes up, right? How do you find out something that's going up? Well, we actually send you an email with it every day from Trade Vision, and you can also look it up inside Trade Vision. If you haven't already, there's a free trial to it, and you can see the breakouts. MACD was literally the only breakout on Friday. Literally the only one, and it's doing well today, so that's a good one. Buy Cheesecake, that might be a good investment today if you like that sort of thing. John West, when you're stuck backholder, when does it make sense to cut your losses ever? Well, the first thing is we want to get to a place where we no longer become backholders. That's the first thing, right? Now, if you're already a backholder, there are things you could do, covered calls or something like that, or you have to just assess like what you actually hold with removing the emotion. And we do that with a lot of our students. We just sit down and we go, okay, what have you actually got in there? How can we make this better? So that'd probably be a good thing to do. Food for sadness. So yeah, it's one of those days, guys, where everything is upside down. Use it as a motivation to get better at this, because there are people who are better at this. I spoke to a trader 2 days ago. He was up 100% this year so far, since the beginning of January. And I'm like, that's pretty good. You're pretty good at this. And he's very, very good at this. So there are people out there who know more than you. There are people out there who are more experienced than you, and that's who you want to learn from. That's who you want to get better from. Or you can do what my cat's doing down here, which is just eating things, which is also an approach, like the cheesecake approach. But yeah, seriously, use this as the kick up the backside where you want to go, okay, I realize I have some weaknesses on risk management. Right? That's just an honest thing to admit to yourself, and then go find some people to learn from. I'm not saying it has to be us, but if you want to get access to my masterclass, links down below, felixprehn.com/get free. You can learn that. It's completely free of charge. And I wish you a beautiful day. The market will go up in the long run.